Are we emerging into the next dot-com bubble? That's what many people are speculating, with certain social media sites such as Facebook and Twitter absolutely exploding in the stock market. So Twitter, as you see here, was up 72% in its first day of trading. The stock absolutely exploded. And in this video, we're going to go over some factors that people are talking about, such as whether or not it's a good buy. So the first thing let's consider is Twitter IPO turns founders into billionaires. Now, that's no surprise. Everybody knows that IPOing a company turns its founders into billionaires. And the tagline here says, but there's no shortage of skepticism about the debut, with many calling it a throwback to the hype of the dot-com bubble of 1999 and suggesting that the price creates risk for investors. So we're going to explore this statement a little bit more in this video. All the source links can be found in the description box below. Next up, 10 ways Twitter's IPO didn't turn out to be like Facebook's IPO. So as we all know, when Facebook IPO'd, it had an immediate jump in price, and then right after that it started crashing. Everyone jumped on the short side and it basically just sold off. But since then, what we know about Facebook is this past August it traded back up to its IPO price, and once it crossed, it just started taking off, and now it's around $50 a share. So whether or not that will last, who knows, but it's just some analysis to apply it to the Twitter IPO. So here we go, 10 ways Twitter's IPO didn't turn out to be like Facebook's. Banker buyer not needed. As we know, Twitter stock hasn't needed massive support from its bankers to trade above its IPO price and is headed to close well above it on its first day. Now, we already know that that has happened. It was up an astonishing 72%. So some other things here, we have it's tiny. Facebook increased the size of its IPO in the days leading up to it and raised 16 billion. So in comparison, Twitter is a lot smaller of a company than Facebook. So insiders not selling, no profits. This is a big one that a lot of people have to consider right here. Facebook was earning money, $1 billion in the calendar year prior to the IPO, but Twitter has lost $133.9 million in the first 9 months of 2013. Still, Twitter is going public at an earlier stage in its growth curve, which might make it easier for Twitter to meet high investor expectations as long as Twitter doesn't cause them to lose faith in its story. So this is crucial right here. The fact that Twitter is IPOing a lot earlier in its growth curve could tell us a lot about the future direction of the stock. So a lot of people could lose faith in this company very, very quickly. And I would warn against just jumping in at a price that just continues rising, because what goes up must come down. People are going to take profits. So if this thing continues to soar, I would personally beware. That's not trading advice. I'm not allowed to give trading advice. I'm not a financial advisor. That is simply my opinion. So fewer users, less lockup, and Twitter stock is up big on IPO day. So that's it for this article, 10 ways Twitter IPO is different than Facebook. And finally, we have, is Twitter a good investment? 11 pros and cons for buying TWTR shares. So just to start off, we have strong demand, differences from the Facebook IPO, bullish tech market, rapid growth, mobile advertising already in place, and now we have some cons. Valued too highly. Twitter has never